Hello and welcome to Macro Mondays here on Landy's Crypto Corner. Today is May 5th, 2025, and we're looking at Bitcoin to start today as usual. And we're going to talk about a few different things regarding price action on the daily and the weekly. And we'll take a look at ETH and Sol if we get time. I'm not going to guarantee it today, but I'll let you know in the title so you'll know for sure. But we're going to take a look at Bitcoin today. Obviously, a little bit of a pullback. I alluded to kind of my thoughts on this on Friday. And so far, Bitcoin has pulled back to a key area that we're going to look at. It's actually the last closing higher low on the weekly. And, kind of tapped on it in the Monday candle and then bounced up a little bit in the lower term timeframes. But you can see that, in the context of the structure here, it's pretty much right in the thick of it, right? In terms of where price got to, it's kind of like right at the 50% here or so of that range, and has now pulled back a little bit to try and find a base where we see this consolidation from last week. Now, I do know for a fact that we're obviously seeing momentum turn. This is, of course, a higher high. We have the higher low swing right here. And, could Bitcoin possibly just kind of hang out and consolidate and put in another higher low? That is possible. If we do start to see closes above 95,218, that would do it, but it wouldn't do much for me. I would want to see it back above the Sunday candle high here, which is actually coming in at 96,312.51 here. That, of course, would be targeting back to the highs here at 98. And then I'd start to look over here, 99, 99 and a half, 100K, and then 101 would be fair game. And also you would see the upper second start to stretch back out towards 101 as well. But we have moved from, expansion on the daily here back into what's looking like a contraction phase. But Bitcoin holding in the strong half of the bands above the basis band here, which is the 20 simple moving average. And we do see a cool down on volatility with the sideways price action here, denoting that. And, BBWP volatility metrics are, it's a volatility metrics related to the bands. So in this case, we're already seeing the mean reversion back to the basis with the basis rising. So that would be the mean reversion, right? Price headed up, headed back down while the basis is rising. That is our volatility cool down for price action as it relates to the bands. And back above the upper first, which would set a low on the daily, and that would be a higher low provided it doesn't swing any lower. Then, we could potentially be entertaining a trip up to that upper second. That would be fair game. Now, if we do see the bottom side swings here around 93 breakdown, then we're looking for a retest of 92, which is a big zone all the way down to 89. You could call it 88 over here as well. And of course, that is pretty confluent with the close open. This was the big higher low. So we had the first bearish candle post expansion from the prior range come in and define this higher low at around 88.7. And then the next higher low in a close was at 92. Now the swing down did get into the thick of this low on the top side of the candles there. That's one of the reasons why I've defined this area as 88.7 or 89 if you just want to be clean about it, to the next higher low close open. We saw that this got swung a lot, and it wasn't until it got closed in over here that then it was, game on to the downside, tried to hold up and then rejected, and we got new lows. So that's kind of the base of the range here. Let's go ahead and turn on local support and resistance zones of interest. You can see that Bitcoin, as I mentioned earlier, is basing off of that weekly higher low, or the last weekly higher low close open. So we had the swing down to 89, which was a higher low, but the close open was at 93.5. Bitcoin found some support there and has been closing above there. If we do start seeing even lower term time frame closes below 93, I'd entertain a swing of 93.5. I would entertain a swing of 93. all the way back to the basis by $92,000. And then, of course, we have the 1.168, which just so happens to fall on that nice higher low right there, which was the close open of that first candle, is confluent with that Fibonacci extension. That is a 16.8% extension above the prior high of the last cycle at $69,000 on a log scale fib pull from 69 down to the bear market low 15.5. So did turn out to be a very important area. It is defining the bottom side of this, the previous consolidation. And I would say, just like I said prior, I want to see, this area hold up for the bulls if we're going to stay bullish. Could it dip down below and throw swings below? Of course, down to the lower first here, which is right around the top side of the structure over here that did test it and reject it. Got tested a couple of times before making new lower lows down there. So essentially $88,700 to $92,000, bottom of the range. And, warnings that we're going to go test that on, lower term timeframes. We're at least going to test a local consolidation here below 93.5 to 93. Anywhere below there, I'm looking for a test of the top side, 92. Fair game down to 89 and maybe even a swing below it. If you start seeing closes below it, we have to entertain a move back down to, $85,000 to $86,000 top side of this structure right here. Danger, 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 as I whistled into the microphone. My apologies for that, by the way. On any closes below 83. We're going to talk on Wednesday, and it's going to be after close, and we do have the FOMC meeting on Wednesday. I do want to get into this just for a moment. We had ISM services come out. They were a beat versus expectations, signaling further growth, but that's price growth as well, which we saw that income and spending were keeping up and inflation stayed flat on the month over month read last week. And, we've gotten, some contraction within the other ISM reads. We're going to get some more over the coming weeks, but one of the bigger factors there is, of course, the same factor that played into GDP, which was the massive amount of imports that was done in the first quarter. And I think we're going to start seeing that. We're starting to see that contract a little bit, and we just saw it in the most recent ISM Services PMI. And if we do see any deals done for trade in the next, couple of weeks, has been indicated by various trade partners and the administration in the United States, those numbers are going to be latent, right? So we're just now getting some of the numbers that are reflecting some of the tariffs that were put in place in terms of imports softening, exports softening, and a few other factors that are at play. I'll get more into that on Spaces events when the time is right. But a lot of this points to, in my opinion, the Fed rate decision, which is coming up on Wednesday. Now, I'm not gonna have the Wednesday check-in, of course, until after this has already been talked about and a decision has been made. And of course, the daily close comes in for Bitcoin and traditional markets, obviously. But I'm not expecting a rate change. That would actually, in my opinion, be a surprise. And you can even see here in TradingView, they tell you, what the forecast is. The consensus forecast is that rates stay steady. They might talk about rate cuts and like when and possibly how and what obviously he's going to do a Q&A, and we're going to see, what his thoughts are regarding some of the numbers coming in, but they're mixed. There's a mix of growth and contraction, a mix of some things that are inflating and some things that are deflating, especially in the energy sector side. So we'll see how things shake out, but I think that the Fed sticks to their plan. Whether that ends up being June, I think sometime in Q3 coming into Q4, we're going to see cuts. And I still think we're going to see 2 cuts this year based on the economic data that we're starting to see coming in from end of April. Now starting to see some of this economic data come in for the actual April, month of April. So just something to monitor. That being said, if there is no surprises and Bitcoin kind of sticks in the range, you can see the upper seconds right there, right below our 101 to 104 area by the 1272 extension. then of course anywhere above there, the highs are fair game. Above 104, look to the close opens around 106, and of course fair game to the high there if it starts to close anywhere in that green zone to that 109, 340, 360 area. And when kind of evaluating what's going on here, Bitcoin did narrowly escape a regular drive of bearish divergence on this particular uptrending move for this structure. Now, I've said this a few times because I talked about the weekly, and I've talked about the weekly a few times before. And I've talked about kind of, on the daily here, technically, we're going to see bearish divergence very long term, but that is hidden bearish divergence in many cases, or continuation drives that don't really matter because, in my opinion, the most powerful bearish divergence that we're going to see out of these structures is on the current trend, right? Now, the higher time frame you go, the more important some of those continuation drives or some of those regular drives that are out of trend from a prior trend do become more important. But in this case, we haven't quite seen enough for me to call like a full-on reversal. That doesn't mean that it can't happen, but pullback so far has been fairly shallow. I'll be honest, I would like to see it, kind of flush down for some liquidity. And I would still, because of where the basis band and the lower first are kind of bracketing our bottom side of the range here, it's still fair game from here. And it wouldn't be abnormal to see that kind of a correction on a move like this that was, quite a rally, and a little bit of consolidation, a move up and a correction back down, and maybe a deeper correction from here wouldn't be out of the ordinary. And nor would some more consolidation and a push back up. So, you just have to set the criteria. To the upside in the lower term timeframes, you can see that above around 95, 96K, that upper first standard deviation and that 96,312 are right there. So if we do start closing back above it, that's where we, fair game to the top side of this consolidation structure. And that's confluent with obviously the highs and the upper second standard deviation pushing right up against the bottom side of that overhead resistance at 101 to 104. It could even rally above. You can see the upper third is up there at just shy. Where is this? This is 104, almost 105. So it is fair game up there. And to the other extreme for the bands here, fair game to just around $84,000 to $85,000 to the downside. I do think that's a little less likely between now and Wednesday. Maybe Wednesday we see some kind of a surprise or there's some kind of major volatile event, but I'm just not seeing it. If Bitcoin continues to go sideways and even down towards the basis, we're just going to get further contraction on the bands here and, kind of bounce around between them. Sure. But when we go from expansion to contraction, typically the upper bands act as resistance and the lower bands act as support when moving from this expansion into a contraction. Now, it doesn't always work that way, and you want to find confluences with, resistance and supports, but that's just something to be aware of. So I'm not necessarily looking for an immediate setup. And let's go ahead and take a look at a few other things. So we talked about, trends, still an uptrend, support and resistance. We talked about volatility. Let's look at momentum here. And momentum has lurched over, and we do see a bit of a momentum divergence here between the two highs here, but nothing crazy. And this is a regular Stochh for those that are not familiar. A Stochh RSI is just the velocity of RSI. So it's reading the RSI. And we just looked at RSI, so there's no reason to use a derivative indicator of it for the way that I look at price action. Some do, and that's fine. This is just a regular stochastic momentum indicator. And it's pivoted at 97, 325, 326 area. If Bitcoin does rise from here within the context of the bullish control zone, which, by the way, you can play divergences on a regular Stochh. They don't tend to work as well on a Stochh RSI because you're already reading RSI and momentum kind of get you goofed in that regard because it's the velocity of RSI. Just use RSI. They're easier to read that way. But in this regard, if we do see this stick around the bullish control zone here, start closing back above 97.3. This would turn it back up in the context of the bullish control zone and maybe get a momentum reset there. But again, we're kind of hot to trot in this area here and falling out of the bullish control zone. We'll see. Could it kind of tease the edge and then go back up? I think it's really going to depend on some of the lower term time frames, like the 4 hour here actually making progress. We do see momentum's turned up. Obviously, trend is down. Broke into a downtrend here. And it's tried to push above and close above around 94,800 and 94,900. Essentially closes above $95,000. I think could potentially push it back up to the 95, 96. But it's still got to, unless it runs straight for the last high, which was a higher high, then it still needs a big build structure, like lower high, higher low. It would have to, we would still be on the lookout for, even if this was like the low, still have to be on the lookout for, like something like this that then goes up, if it weren't going to just take out this last high, which again would still need to create trend, right? Not that we haven't seen just absolute F off giant green and red candles, but that would be the constructive way to look at it, in my opinion. Maybe even build up some bullish divergence or something here as well. 94,333 for the 4 hour, 6 hours just starting to get its turn, 93. So the bulls have an opportunity here, especially coming off a major weekly support level. Obviously it's been flipped back into support, that weekly higher low at 93.5. So the bulls do have a chance, but they do have a few, daily and 12 hours still kind of pressured down, but in the context of an uptrend still. So, looks fine. Bulls still have the door open. They start losing 93.5, 93. Then I think that door closes for a little bit, and then we come back to it later in some of those lower term time frames. Let's go ahead and take a look at the weekly. And, I don't think that there's going to be too much to say about Ethereum and Solana today. They're still sitting at all the same areas. I've already talked about these areas so much that it's getting old. 1800, you want to see that. Solana, you want to see 125 hold, need to break 150 now to the top side, or 157 essentially, try to test up further. 160, 169, nice. And for Ethereum, essentially it's got to break above 1956, go test 2100 and start breaking back into that 21 to 2300 area. There's not too much else to say about that. Let's go ahead and take a look at Bitcoin on the weekly. And this is one of those situations where there's a lot of bearish points, but there's also a lot of bullish points, and arguments can be made either way, and that's typical, right? The trend is your friend until the end of the trend. When the trend is unclear, everyone's in fear or everyone's uncertain, and in this case, it's just about setting conditions. It's a higher high. We know that even if this was the high, that bulls need to see a higher low, equal low structure. And then get a trend reversal on a higher low, whether it's a shallow or a deeper retrace. We can say the more bullish scenario would be, nice, bounce around between the upper and lower first standard deviation. If this was going to be the high, which by the way, we're going to talk about in a second, what would define this as a high for me. And on a closing basis, obviously. But, this would be the more bullish scenario, higher low and then off. And then the higher low is your trend reversal setup once it's confirmed. And then it has to take out the last higher high. And then you've got, then you got a new trend forming. But in this case, higher low or equal low is fair game on a swing. You do want to see higher low, equal low on a close. Unless it's a lower low that remains within the last swing and then it gets divergence, then that's fair game as well for the bulls. Otherwise, we end up in the more bearish scenario where things come up and they come right back down, and this last higher high was a deviation of trend. So there is, from a trend standpoint, that there's not much happening here, and it's kind of, sit on your hands and wait if you're an investor, because no matter how high this goes, you're still, if it's going to be bullish, you're going to get that reversal setup start to show itself. Doesn't mean that it's going to remain bullish, because it has to continue with that trend off of a higher low, equal low structure. But either way, investors are going to get their chance. Traders are just going to have a ball anyway, either way. In this case, one of the big things that I do want to caution bulls about and bears about is, coming out of the bearish control zone here, and you can see the projected here. This is a really fancy indicator. It's one of Eric Crown's developers created it. It is a paid indicator. There are free ones and stuff that are exactly like this, that pivots and all kinds of cool stuff. But I think that he's got such a great stable of developers. I've always supported the guys over there, including Caretaker, who's allowed me to pilfer some of his code for my free indicator. So in this case, $77,000 will keep the momentum up. The danger here is that the bulls give up on a higher high, and then get a momentum shift at the same time. That would increase the chances of it being a deviation of trend. But for the bears, your warning is that if this just continues, even if price isn't making progress right away, all of a sudden it can cannon shot right to the top side, especially as it starts creeping in towards the bullish control zone, if we don't see a rejection, of course. Same for RSI. This metric has been updated to around 110. I already have it coded in here. It's not reflected, but 110 is the critical zone. That's actually this high right here. You'll just have to take my word for it. It's a 69 read or a 68 read, which means that we could potentially see a higher high at 110 and still a bearish divergence drive, right? And then there's this guy up here, which is, we could see, I think this is actually messed up. Let me go ahead and take that read for the critical level and put it at, I think, what did we get for this this read here? Give me just a moment. Sorry. This was a 78 read. So it would still throw bearish divergence on a 78 read on RSI. So we'll take the critical level up to 78, and it'll give us the math. It's for some reason not painting on here correctly, but it'd be 141,200, and it could still, it'd still be throwing bearish divergence. Obviously, it would still be throwing bearish divergence all the way back here from the prior range, right? So, there's a lot of bearish divergence that could still occur, but even with, higher highs, obviously one would be a swing at 110 would be a dangerous spot that we've talked about on the monthly that we'll revisit again on the monthly. But, that'd be very much like what we saw last cycle at 110, which is just slightly above the all-time high right now. But remember, this is reading closes. So, it's one of those situations where even on higher highs still has the potential to throw bearish divergence either locally from the local structure or basically from the local structure here, as momentum and volume have kind of stalled. But beware, when we get major momentum shifts, especially with DMI closing up, that's not to be taken lightly. Obviously, what we would need to see is over the next 2-week candles at 99.8 or $100,000 start getting closed above. That's going to be something that we have to watch coming in through the end of this week. For the 2-week, 3-week, that's up there at that 101.8. 4-week is at 100,000. Monthly, I think, is at 100,000 as well, 100,300. So, just overhead for some of the pivots. It's going to be a long month, and we're going to be talking about this a lot. So just, keep your eye on a swivel. On the daily, you got to give it some room. If we start to see price fall, even aggressively, you still got to give it some room to kind of build out. Ignore the noise, trade what you see, right? That's the big thing. Ignore the noise, trade what you see. Come up with your own thesis. You can use the thesis that I have or the analysis that I present as a gut check. Some of you who are learning, I refer you to my Learn TA with Landy, with the organized crew over there in Peace Love and all those guys. They do such a great job, and I just really enjoy talking and with them and doing the learn TA series with them, to understand what my analysis is. But you have to understand that you have to have your own perspective on this as well. And you have to keep a level head when price is going up and when it's going down, especially if you're not actively trading. There's no reason to listen to the noise. Just look at the major areas. So yeah, that's gonna be it for today. I will talk to you on Wednesday. We'll likely touch on whatever Powell talks about for a moment and then get right into the analysis. So to the downside, essentially watch 92 to 80, 88.7, $89,000. That's the main support for the range. So even if price falls towards there, that's what you got to pay attention to. Some of you will give 88 a chance as well, which is fair. And to the upside, any closes back above 96, and I would start looking back towards the local higher at 98. Fair game up to that 100 to 101 as well, between 98 and 101 basically, and then see what happens from there. I'll talk to you again on Wednesday. Have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. With all of that said, 90 out. Take care.